Welcome back, fellow investors and curious minds. Today, we're diving deep into the world of Intel Corporation to unravel its financial story and help you make sense of the numbers. From P/E ratios to growth projections, we've got it all covered. So, grab your popcorn and let's decode Intel. Alright, let's kick things off with the PRTTM, or price-to-earnings ratio trailing 12 months. Currently, we're missing this data due to the negative EPS, but over the last 5 years, Intel has averaged a PR of 10.45. Looking forward, the PER FWD is 18.73, indicating a more optimistic outlook, but be careful. Now, moving on to the PG ratio, which unfortunately isn't available due to the negative current EPS. This ratio helps us understand a company's growth potential in relation to its price. Keep an eye on this one once the EPS turns positive. Intel's return on equity stands at -0.90%, while the return on assets is -0.50%. These figures give us insights into how efficiently the company is using its assets and equity to generate profits. The earnings per share is currently -0.23, not the best news for investors. However, projections for the next 5 years show a promising growth rate of 8.2%. Fingers crossed for a turnaround. Intel offers a dividend yield of 1.5%, and over the last decade, the dividend has grown at a CAGR of 0.86%. This can be attractive for income-oriented investors, but unfortunately, in the last year there has been a sharp cut in the dividend payout, going from being a company with a high dividend yield to one with a dividend yield close to 1%. The operating margin is -7%, indicating challenges in managing operational costs. The profit margin stands at -1.70%, reflecting the company's ability to convert sales into profits. These negative metrics suggest that for every $1 Intel sells, it is losing around 2 cents. Impressive, right? Up until 2021, Intel experienced a robust growth trajectory in both revenue and earnings. However, there's been a sharp drop since then, leading to a 50% market value decline, and also it has not returned benefits to the shareholders who own the stock during the last 5 years. This is a red flag worth exploring. With a debt-equity ratio of 0.49 and a long-term debt-equity ratio of 0.46, Intel seems to be managing its debt well, which is essential for long-term stability. Over the last 52 weeks, the average price return for Intel has been -4.70%. Market volatility and company-specific challenges could be contributing factors. Intel has a market capitalization of $139.25 billion, making it one of the largest companies in the semiconductor industry. Analysts foresee an average price of $35.17 in the next 12 months, indicating a potential upside of 5.78%. However, our own analysis suggests a fair value of $19.55, signaling a potential overvaluation compared to the current price of $33.25. Wrapping things up, Intel Corporation's financial landscape is a mixed bag of potential and challenges. While growth projections show promise, negative EPS and recent drops in revenue and profit warrant careful consideration. As always, remember that numbers are just a piece of the puzzle. Before making any investment decisions, do your research, assess the company's strategy, and consider multiple perspectives. Thanks for joining us today. Don't forget to like, subscribe, and hit that notification bell. Happy investing!